Imagine opening your bank account right now. At first, everything looks fine. Your life looks successful. Nice apartment, decent phone, bills paid. From the outside, it looks like you're doing well. But then you scroll down, and you notice something strange. Almost everything you own technically belongs to your future self. The house, bank's money. The business idea, investor's money. The lifestyle upgrades, credit card money. You're not just living today, you're quietly spending tomorrow. Now here's the uncomfortable question. If tomorrow suddenly slowed down, would your life today still survive? Because believe it or not, this exact question is now being asked about one of the most powerful economies on Earth, China. For decades, China lived the same way many ambitious people do. Build faster today. Pay for it tomorrow. Cities appeared almost overnight. Highways stretched across entire provinces. Skyscrapers rose faster than anywhere in modern history. It looked unstoppable. But now investors are asking a dangerous question. Was that growth powered by real demand? Or by tomorrow's money? Because if tomorrow arrives slower than expected, everything built today suddenly becomes very expensive. And that's where this story gets interesting. Because this isn't just China's story. It's the same financial habit millions of people quietly live with every day. Build now, pay later. And sometimes, that strategy works brilliantly. Until the future finally shows up. Why fast growth feels so good? Growth feels amazing. When your income increases, life suddenly feels easier. A better apartment, better restaurants, better choices. Success starts feeling normal. Now imagine that feeling, not for a few years, but for 4 decades. That's what happened in China. Factories multiplied, exports exploded, cities expanded faster than anywhere on Earth. Hundreds of millions of people escaped poverty. From the outside, it looked like the greatest economic success story of our time. But here's the part most people miss. Fast growth rarely comes for free. There is always fuel behind it. And in modern economies, that fuel is usually credit. Credit is like economic caffeine. It makes everything move faster. Businesses expand faster. Cities grow faster. Entire economies accelerate. But here's the catch most people don't think about. Credit doesn't remove the cost. It simply moves the cost into the future. And once the future arrives, the bill finally appears. And this is where China's story becomes uncomfortable. Because the question investors are asking today is simple. Did China grow faster than its future could support? The credit machine. Think about how people upgrade their lives. You want a house. You take a mortgage. You want to start a business. You borrow capital. You want a better lifestyle faster than your income allows. You use credit. You borrow from tomorrow. Now imagine doing that, not just for a person, not just for a company, but for an entire country. That's essentially what China did. State banks issued massive loans. Local governments financed huge infrastructure projects. Developers borrowed billions. Construction became the engine of economic growth. New highways appeared. Subway systems expanded. Entire districts rose from empty land. Each project created jobs. Each job created spending. Each dollar created momentum. And momentum created even more growth. For years, the system looked unstoppable, but every loan quietly created something else. A promise. A promise that tomorrow's economy would be strong enough to support everything built today. And for decades, that promise looked safe. Until investors started asking a different question. What happens when tomorrow finally arrives? The real estate superengine. At the center of China's growth machine was real estate. Homes became investments. Apartments became savings accounts. Developers built entire cities. Construction cranes filled the skyline. Prices climbed. Confidence grew. And the cycle fed itself. Higher prices created optimism. Optimism created more building. More building required more loans. And the credit machine kept spinning. For years, this system looked unstoppable. But real estate markets follow a simple rule. Prices can rise quickly, But supply eventually catches up, and when debt is involved, that moment becomes dangerous. Because once prices stop rising, confidence begins to change. And when confidence changes, everything changes. And this is exactly the moment China may be entering right now, building the future before it arrives. Some Chinese cities became famous for something unusual. Entire neighborhoods existed before people moved in. Perfect roads, modern towers, beautiful shopping malls, but almost nobody living there. These became known as ghost cities. To critics, they looked like waste. To planners, they looked like preparation. China expected hundreds of millions more people to move into cities, so infrastructure was built early. Think about that same person again. Someone buying a bigger house today, because they expect a promotion tomorrow. The logic feels reasonable. When the future arrives, everything will already be ready. And sometimes, that strategy works perfectly. But there's one uncomfortable truth. It only works if the future actually arrives. And if it doesn't, the cost of tomorrow suddenly appears today. When credit turns into risk, credit creates speed, but it also magnifies mistakes. When borrowing grows too large, even small changes matter. Property prices slow, developers struggle, investors become cautious, banks tighten lending, confidence shifts, and once confidence moves, the entire system starts feeling different. This pattern isn't unique to China. It happens everywhere. Housing bubbles, corporate debt cycles, financial crises. Credit can build incredible success. But when the cycle turns, it reveals the real strength underneath. So if China were a person, he would look incredibly ambitious. Someone determined to build the future faster than anyone else. And for decades, that strategy worked. It transformed infrastructure. It lifted millions out of poverty. It reshaped the global economy. But the deeper lesson isn't just about China. It's about how credit works everywhere. In countries, in businesses, and sometimes in our own lives. Borrowing from tomorrow can accelerate success, but it also creates responsibility. Because eventually, tomorrow arrives. China shows how powerful credit-driven growth can be. But it also reminds us of something every investor eventually learns. You can build the future with tomorrow's money. But sooner or later, tomorrow always asks to be paid back.